Never ever in history the Fed hiked the rates with so low growth and so low inflation. And so welcome to the weekly Werthstein update. But Janet Yellen did it early in the year. She said 3 times she will hike the rates. And now she has to do it so that the people don't think that she doesn't know what she is doing. And that's a bit of a problem, because if you look in the real facts, and not in the sentiment data for the economy, there we had a boom after Donald Trump came into the White House, because all the people looked forward for infrastructure spending and for tax cuts, but nothing of that happened. And if you look on the hard facts, you can see that machinery orders, durable goods, all this stuff is not very good. Labor market seems to be strong, but if you look deeper in, you have to see that a lot of American people don't register anymore as jobless because they lost the hope that they will find a job. And so the participation rate becomes lower and lower and lower the last years. Okay, what does it mean in the end, these rate hike of the Fed for the equities, for the stock markets and for the base portfolio of Werthstein? There's no question indeed that each bear market had been started, or before each bear market we saw a time of rate hikes. If I can remember, at the last one in 2005, the Fed gone up from 1% to 5.25, and that lets bust the bubble on the real estate market, and in the end also on the stock market, as we know. But that also shows the difference between that time and our time now, because with rates of 1.25, we have not really high interest rates, and perhaps we see one other rate hike of 0.25 on 1.5, and that's it. And if the economy will not boom, then I think that will be the end of it. And this brackets for the equity market is not as big as if the rates would go on 5%. So we are still optimistic from Werthstein, and the Werthstein index gone up a bit because political risks are a bit lower now, but we are still defensive because this doping, what we saw for the markets with zero interest rates and with buying programs for bonds, is over. And that, for a stock market, this is what is really near the all-time highs, and what looks a bit fragile. Because if we look what was the driver behind the record prices we have seen on Wall Street, it was not the broad market. It was just some technology companies like Amazon, like Google, like Facebook, like Netflix. And on Friday last week we saw they are in a not so secure mode, so there is room to go down because we see a very big drop, and that could continue. So to make a long story very short, we still think there are better times to be 100% invested in equities, and that's the time when the equities came down. But now we are on record high, so we still a bit defensive on the base portfolio. But there are good news on one of our zeitgeist robotics. Boston Dynamics, that's the robotic company of Google, will be sold to SoftBank. They will make their robotic business better. They paid a good price from what we can hear, and that shows robotics is really one big theme in our time. And that's a good thing of the Werthstein concept, that you not have these broad investment in the broad market, that we have these zeitgeist what could rise also if the whole broad stock market is not rising anymore or going down a bit. So that was the update after the Fed decision this week, and the next update you see next week. Goodbye.